And if it's 2 to 50, if my company size is 2 to 50, do I have to offer insurance?
No, you do not.
Okay.
You're not required.
Not required. So in that case, my employees could go to the exchange.
They could.
Now, will I get penalized if they go to the exchange?
No, not in that employee size.
Okay.
So you have a lot of flexibility as a small company, and there are companies that hover in that, I don't know, let's say 40 life range that purposefully stay under 50 lives just so they can have that flexibility. Now, in the end, most businesses are going to offer it because it is important. You know, you're better employees, you're responsible employees,
right,
the ones you want behind that desk or on that floor. Well, chances are that they care about themselves and their families, and having benefits is important. So they're not gonna want to be hired by your company
that makes sense.
if you're not carrying it.
Yeah, or if it's a very limited plan.
Right.
Yeah, that's something I was reading recently, is how important those benefits are going to be for employees.
Yes.
So that's going to be, you may extend an offer to an employee, but once the offer is extended, probably the second question after the offer is, talk to me about your benefits plan.
Exactly.
Yeah.
What are your benefits? That's number 2 on the list, right? And in some cases, maybe even before the salary.
That's right. Yeah.
Evidence has shown companies that retain their employees longer and have a higher degree of satisfaction and comfort from their employees are companies that offer not necessarily a high level of pay, but a high level of benefits and offer an environment that's caring and employees feel comfortable in.
Yeah. So, well, and it's, I've heard ACA rates on the individual market, $3,000 for a family.
Right.
With a high deductible. So that's a paycheck in some cases.
Absolutely.
If you're paying $3,000 a month for your family plan and you amortize that over a year, I would take $15,000 less in salary.
Yes.
To get a better, to get a cheaper plan.
That's more than a mortgage.
It's
so how do you deal with that? In the exchange, people that it's income based, so you can get a subsidy.
Okay. You can.
There's a couple of different types of subsidies, but the bottom line is those costs can be reduced depending upon your income.
Right.
And the benefits can actually get increased as well depending upon your income. But if you exceed those limits, you're just stuck paying very, very expensive rates.
Wow. Yeah, that's it's a big thing right now. The employee benefit, the healthcare, right? So typically, what are some other benefits? that you see that companies should offer, that should pay attention to outside of the major healthcare?
Well, there's the obvious dental and vision, and those are something almost everybody uses. Not every company offers vision, but it's so inexpensive. There's really no reason not to.
Right.
And then you move on from there into your disability, short and long-term disability. And I would say long-term disability is often overlooked, more than anything else.
How do you mean?
It's just either it's not offered, or if it is offered, they don't pay attention to the structure of it, and it's not communicated to the employees how important that benefit is. Because
so long-term typically kicks in after 90 days?
Generally 90 days. You can structure it to kick in after, say, 6 months or even 30 days.
Right.
Generally 90 days is, and it will carry you, I don't know, your average long-term disability policy will cover you for 2 years.
Okay.
And then your better policies go beyond that.
Okay.
Maybe 5 years, maybe to age 65, depending on the situation. And that's what I mean by paying attention to having a policy that fits your employees.
Right.
And because becoming disabled is financially disastrous to a family. I mean, from a financial standpoint, it's worse than death. I mean, that's a strong thing to say, but what happens is the person that's disabled is generally going to need care. And is going to be at home. Then you got the other spouse that's going to be giving that person care. So it taps into the other family member's ability to earn income. So it's a double whammy. It can take everybody out of play almost and be devastating.
No, I didn't. I haven't really thought about it in that capacity. But you're right. Typically, if you become injured, you're going to have to rely on someone else to help you with the day-to-day activities.
Absolutely. And if it's a very bad injury, let's say your recovery at home and you need 24-hour nursing care, or you're on a ventilator, how are you going to afford that care? Who's going to pay for those services? Especially you're out of work. All right, the employer is not going to keep you on their. You have to be actively at work to stay on their medical plan.
Right.
Sooner or later, you're going to be put on COBRA. Well, somebody's got to pay for the COBRA. Somebody's got to pay for your health insurance while you're disabled. Somebody's got to pay for the care while you're disabled. It can bankrupt a family in a hurry.
Yeah.
And if it doesn't, it's a very big hurdle to take. So having that policy in place is absolutely a lifesaver in many situations.
Right.